All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me tonight as we look to close out the week, taking a look at the technicals and the fundamentals to see what we can take advantage of, as always, in this Forex market. So without further ado, let's make sure that we turn off any and all distractions. Make sure you grab a pen and paper, take lots of notes, and let's continue to do an awesome job of participating and engaging. If everybody can hear me loud and clear, drop me a 1 in the chat. Let me know you're ready to go. Let me know you're with me on this Thursday evening. All right. Appreciate it. Thank you very much. All right. So we are all set. All right. So let me make sure that everybody has control over their microphone. I think I got everybody so far. And let's get down to business, right? So coming over to the Forex Factory and taking a look at the calendar to day, right? On the 9th, 4:45 a.m., we have monetary policy report hearings, right? One of the cool things you can always do on a Forex Factory, right? Click on the folder, and then you can start reading, right? A lot of articles, right? So just looking at the title here, you can see that Bank of England big hitters point to further rate hikes for the British pound, holds recovery gains. Okay, so that's something to keep an eye on. You can read that full story. As a matter of fact, I will take this, right? This is one of my good news sources, poundsterlinglive.com. All right, so it's cool that this article is coming from that site, something that I always go to and read. And if you're into it, right, if you're into the fundamentals and you want to learn more, it's a really, really good site. So you can see, right, that it's dedicated to, right, the currency market. And you can see the different articles, right? Pretty fascinating. All right, so I'm going to put this in the chat so everybody can read up on that. There you go. All right, so make sure you add that Pound Sterling Live to your favorites on your computer. They always have on a regular basis really good news articles. So that's that. So that was the news today on the 8th, right? So that, hey, more rate hikes to come. All right, so we shall see what goes on. Friday, right? GDP month over month for the UK. So that's at 2 a.m., right? So if you're in any pound setups, don't be surprised at 2 a.m. That you see that market get moving. We know we have London open and things like that. But right at that 2 a.m. spot is that GDP coming out for the UK. And then at 8:30, we've got employment numbers and data coming out for Canada. And then we got sentiment data coming out, University of Michigan, for the United States. So clicking on over, reading the article, we see here, stock market today, Dow slips his yield curve inversion, right? You know, Joy was talking about this. We had a little conversation about it last night, but you can see here it's very, very important, right? It's a key indicator. Like we say, during these times, we'll see how that plays out, right? So Dow slips his yield curve inversion, deepens to rattle stocks, okay? So you can see here in this article, the 2 10-year treasury yield, 2 and 10-year treasury yield inverted by 85 basis points, the deepest inversion since the early 1980s, triggering fresh worries about economic troubles, just as investors price in a more hawkish Federal Reserve, right? So worries about recession have been belied by a strong labor market, though following jobless claims data released Thursday that surprised to the upside. Some suggest the recent surge in layoffs will start to push claims higher later this year. All right. So this is another good article here. I'm going to post this for everybody to read. So a lot of back and forth, but that is always a key data point, right? For sentiment is that 2 and 10-year yield curve. And let me get this posted first. Okay. Very important. Okay. You can see it's the deepest since the 1980s. But we'll see how good of a predictor it is this go around, considering everything that has happened over the last few years. And we talked about that last night. I do have a video. Let me let me try something real quick. Okay, I think I'm good. I do have a video, right? I always like to go to the Wall Street Journal. Hey, largest university in the world, YouTube. I love it, right? So I always use, right, the Wall Street Journal when I'm looking for certain things to be explained that can really put it way down low and provide a good visual. So this, what I'm going to share, is a video of why investors are obsessed with the inverted yield curve. And I want us to pay close attention to this since we're reading news, right, about the yield curve and the concerns over it in the market, okay? And then we'll talk about it some more after the video. Everybody cool with that? Drop me a 1 in the chat. All right, so pretty important stuff. And then, hold on 1 second. Can everybody hear that? Drop me a 2. Was everybody able to hear that sound from the video? Oh, no? Hold on, let me play it. Can everybody hear that? No sound. No sound. Okay. Hold on 1 second. Let me try to figure this out. Because I thought I had it set up. But let me share. Let me do this. Share screen sound. Share. All right. One more time. Let me know if you can hear it.
You know, the flattening yield curve has been kind of an overhang.
Inverted yield curve. Yikes.
All right,
Inverted yield
good.
curves
Okay.
can often, but not always, predict a recession.
Let me reset it, and then we'll watch it together. Okay, so when you're watching these news shows and these money shows, you'll know exactly what they're talking about. You'll understand why it's so important. So let me expand the screen and hit
Markets get shaky, investors and economists start talking about the yield curve.
You know, the flattening yield curve has been kind of an overhang.
Inverted yield curve. Yikes. Inverted yield curves can often, but not always, predict a recession.
The reason? When the curve inverts, investors see it as an omen for an economic recession. But what exactly is the yield curve? To understand the yield curve, first you have to understand bonds. A bond is a chunk of money an investor lends to a company or a government, with the agreement that over time, they'll be repaid with interest. The interest, or the amount of money the investor earns annually per $100 of bonds, is called the yield. The yield curve measures the yields of all the bonds the Treasury is selling over a long period of time. The x-axis shows when the bonds will be repaid, how many months, years, or decades, and the y-axis measures the yield, or the interest that bondholders receive annually. Here's what a normal, healthy yield curve looks like. This means the economy is expanding. You can see that when the market is healthy, longer-term bonds trade at a higher yield, and shorter-term bonds trade at a lower one. So in a healthy yield curve, a 2-year bond might yield 3% annually, and a 10-year bond might get 4%. Investors and economists look at the way the curve bends to predict the health of the economy. So, what causes the yield curve to change shape and invert? There are 2 levers. The first is the Fed, which influences short-term bonds on the left side of the curve. In a booming economy, the Fed raises short-term interest rates, also known as yields, to rein in borrowing. They're trying to limit inflation, which can get out of hand when too many people are borrowing and economic growth is moving too quickly. But when the economy is stagnant, the Fed often will lower rates to encourage borrowing. Right now, the Fed is slowly raising rates. The markets have been trending up for the past 10 years, and unemployment is way down, so they're betting it's time to raise rates and restrict borrowing. Investor sentiment controls the right side of the chart. When investors think the economy is in good shape, they take money out of long-term bonds and instead pour their money into riskier assets, like stocks. The lower demand causes the price of bonds to sink, pushing up the yield. This is an important point. The price of a bond is inversely related to the yield, so when bond prices sink, the yields rise, and vice versa. But when investors think the economy is headed for a rough patch, they pull their money out of stocks and put it somewhere safer, like long-term bonds. This causes yields to drop. That started to happen at the end of 2018. Investors worried that the global economy was slowing down, and they put more money in long-term bonds. Yields, which had been above 3% on 10-year treasuries, fell closer to 2.5%. It sounds like a small difference, but that's almost a 20% change. This is the key to reading the yield chart. When short-term interest rates go up and investor sentiment goes down, the yield curve starts to flatten, and it can eventually invert. Investors view this as a bad omen. Just look at this chart. Every time the yield curve dips below zero, a recession follows. So what does the yield curve look like today? Here's the yield curve in January 2018, and here it is now. You can see it's flattening. This is a big deal for the markets, and perhaps the strongest signal yet that we're headed toward a bear market. But we're not there yet. The curve is pretty flat, but it's not inverted. That means for now, there's no reason to believe a recession is imminent. But if investors put more and more money in long-term bonds, and if the Fed keeps raising rates, that could change.
All right. Can everybody hear me? Drop me a 1 in the chat. I want to make sure I've got the sound back right on this. Okay, cool. Right. So that's pretty fascinating, right? And then when you apply it to your charts, right, and you look at the fundamentals and the technicals, and then you realize, like, I don't have to major in economics to understand this stuff. It's just all about, hey, what research do I need to do? What are the terms, right? Where do I need to go? That's all it's about. It's all about discovery, right? None of it is rocket science. So when you see something like this as a trader, when you read this article, you don't have to be an expert at it. You just want to have knowledge, of why they're concerned, right? Why they're concerned. Okay. That's why. So we see our 10-year, okay, where it's at, and then we could go, this is on TradingView, and you could just go take a look at the bond prices, and you could blank this out, and then you can look at the 2-year. See that? See that 2 years up at 4.49%. You go back and you look at the 10-year. Okay. And you can see we're at 3.67. Right? So that shorter term rate is going up. Why? Because there's some concern and you're starting to see some capital shift to those long-term bonds, meaning, right, it's just a reallocation of money, right? So maybe I'm going to pull some of this money out of the stock market and riskier assets and park it somewhere safe, right? And park it somewhere safe. And so when you talk about U.S. bonds, so somebody, right? Second, can everybody see my screen? Yes? No? It's saying that my screen share is loading. Yes? Okay. All right. So thank you. So when you start to ask yourself, like, when you talk about governments and you talk about stability and you talk about large economies and you talk about bonds, right? Large companies, corporations, and governments, right? They issue bonds, right? Borrowing from the people, right? To pay back later with the yield, the guaranteed yield. So somebody tell me, if I'm gonna buy a bond, where is the safest place to probably buy that bond? Especially if I can get a decent return, not as large as you can in the stock market, but it's not as risky. Where would I put my, if I'm living in another country, I'm a big time investor, or even here in the United States, and I have money, where would I park my money, right? Joy, exactly. The US, right? The United States, right? So we always say that the dollar can play both sides of the coin and can act as a safe haven too, because of that, because it's the world's reserve currency, because of we have the largest economy in the world, which that's why that's so important. Why you see the back and forth the United States and China all the time, because China says, hey, we've got our eyes set. We want to be the world's largest economy. That means something. Right? That means something. So when you look over here and you click and you look at the DXY and you can see that, hey, it's catching a little bit of a bid as a result. So the question is starting to become, do we start placing bids on the dollar long? Right? So it all starts to come together, right? It all starts to come together. And you start to see why people pay attention to this stuff, and why fundamentals matter, why the stock market matters to the currency, right? To the Forex market, okay? So did that help anybody? Drop me a 3 in the chat. Think that helped? Okay. So you don't have to be an expert at it, but you want to be aware of it. You want to be a little bit knowledgeable about it. All right, especially when you're playing swings and things like that. So at the least you're not caught by surprise, right? You're not caught by surprise. All right. So because our first job as traders, right, is to protect capital first and foremost. Even before we make it, we want to make sure that we protect what we have. All right, and have an general understanding of why the market is moving the way it is. All right. So glad that helped some people. So this is where we are, right? Taking a look at the dollar index, right? We pointed that out last night off the 4-hour chart. Hey, we had an 80-20 right off the jobs numbers, hit the technical zone, boom. And now, right, we're getting a push up. So we'll continue to see how that plays out. And you can see that was an older video from 2018-19 when it was starting to flatten, when the yield curve was starting to flatten. Then we had a period where it dipped a little bit, right? And it inverted a little bit, but now you have an article today. Hey, this is the deepest inversion since the 1980s. Right? So there's some concern. But I'm always cautious because we are living in some unprecedented times, right? From a historical perspective, with so many things happening at once. So, we'll continue to trade what we see in the meantime. I want to take a look at a couple things, and then we can actually take some requests tonight, but some things that I want everybody to keep an eye on, right? And it all depends on how, right, the market's going to react. So this here, right, this Aussie CAD, right, here's the long-term view, right? We can see here on this Aussie CAD, we've got a stochastic that is in the buy zone on the daily. And you can see we've already had a pullback to a 61.8. You can see how it's taken off. We got the correction. And now we've got, right, another swing low that has formed here. Okay. So here is a level. Okay. Yeah. Like that. We'll link that down. So we've got a new swing low. That's a new area of support. And you can see we're catching bids to the upside slowly, but surely. So what I'm focusing on is, here's our 4-hour chart. And you can see we held right in that zone where we just put that new daily level. We held in that zone and we're pushing up. Okay. So here, right, we've got stochastics that's in the sell zone. So I'm interested to see if this is going to continue to push sideways or maybe correct a little bit lower. But you can see here, right here on this leg, right, we've been making higher highs and higher lows. Okay. So the question now becomes, from this 4-hour perspective, is to continue to watch the momentum. And then, hey, see if eventually we get this break on the cloud. Okay. The break on the cloud for a continued long play on that. So you take a little bit of time, but continue to watch it. If, right, we come here on the 1 hour, I'm going to adjust this just slightly like that. Okay. You can see that we're trying to, right? We got a 4-hour and a 1-hour stochastic misalignment. This is in the buy zone on the 1, but you got sideways movement as a result. So just continuing to watch this Aussie CAD to see, if we start to get that continued momentum to the upside. Okay, because that's beautiful price action there. And now we've broken this zone. Okay. We've broken this zone here. And now we're retesting this zone, right? Okay. So the question is, do we hold and then do we get a continuation to get long? Okay. So you can just see how it's just breaking, retesting, boom, right? So of course, if we catch bids and we move to the upside, we're going to break this level here at 93.79 and we're eventually going to retest it, okay? So we're right here in that retest mode now. So keep an eye on that Aussie CAD. Any questions on that? All right, so that's a potential, continuation of a swing, right? An ABD CD swing to the upside on that. So let's continue to watch that one. Then I want to take a look at this Aussie dollar because we were just talking about that, right? If we continue to get a move up in the dollar, we may see where we left off, right? So here we are, right, sitting right around that 50% level, and it's moving sideways, but just stochastic too. After this correction out of the zone, it's back in the buy zone. So the question is when we move through these lower time frames, okay, we haven't gotten that 382 yet. If the dollar starts catching bids to the upside and continue, this most likely come down, right? So just continue to keep an eye on this. You can see how it moved back, right? Didn't move all the way up to the top of the zone and I had drawn out, but you can see where it's moved back into that zone that we drew up at the beginning of the week, coming out of the weekend, right? So beautiful 80-20 play with a double top here, okay? Price held that weekly level, double top, and we got beautiful correction. It danced around for a while, but it pulled back now. So where are we at? From the fib, hold on. Okay. All right. So it's already been a pretty nice move down. Okay. It's already been a pretty nice move down. So, right, it's just a matter of where are we at? Okay, so we didn't quite get a 50% pullback on that, at least, but we did hold at this 70-cent level, and we got a pretty strong reaction to the downside, right? So we may be looking for that continuation to move on the Aussie dollar down to that 382. Okay, so continue to watch that one. Is anybody still short on that Aussie dollar, trying to let that 80-20 play out? No? Okay. Take it. All right. That's all right. So, I mean, it's a beautiful move out the zone. It may be out, but I was eyeing this one up for a second chance, right, at entry, right, to continue short. So continue to watch that that Aussie dollar. Also, I've got to I want to take a look at this CAD Swiss longer term play. Right, and we're watching, still moving sideways from the daily, but right, we're still on this 4, right, off this low. It's choppy, it's ranging, but I'm interested in to see if we start to get price to continue to push, right, make a move with this CAD and push up above this zone, back above the cloud. So keep an eye on that one too, as I do have that drawn up from a long-term play from the daily, because technically right, on the daily, that is like a large play back to the upside. I'm looking for that swing. Okay. As you can see, it's having a hard time, but we are at some lows. So that's when if you catch it and it starts making a run, right, that could really, really pay off. So just continue to watch that CAD Swiss. Then I'm keeping a close eye on some of these yen crosses. I was taking a look at this CAD yen. Because on the daily, right, we know we're in an 80-20 scenario and it's holding in that area. Okay. So you see how it picked up and now it's fighting this level here. But in these trades I'm talking about may take a while, but you can see that I always try to, I have the short-term plays, but then I keep my eye on the longer swings too, because those are setups that you could take at a very small lot size. And if you start to get the momentum going in your direction, you can start to compound that over time. And we talked about how you can have two different accounts, your swing accounts, and then your account where you have your shorter term plays. But you can see how we broke out of the zone and now we've just been kind of sitting here retesting this area. So I'm just wondering, it's just been holding there for a while. So I'm just wondering, like, are we gonna break out, to the upside, right? I would love to see that, right? That could be a major play. So I'm gonna leave that rectangle right there to see if we can push out of that zone. All right. Any questions on any of those pairs? No? Okay. So just continue to watch that, and then watch the yen crosses in general, because I know there's a lot of speculation going back and forth of who's going to take over as the BOJ governor in Japan. But I mean, we still have a situation. The yen can act as a safe haven. Yes, I don't think we're quite there yet. It is just speculation around who's going to be the BOJ governor. So I'm interested to see, right, what's going to happen with these yen crosses. I mean, the euro yen, right? I still have a long bias on the euro yen overall. It's doing the dance, but I continue to see a hawkish ECB, and when you pin that against what's going on with the yen, I'm still long until the market tells us otherwise. So that's another one to watch out in the yen crosses as well. And then the last one before we start taking some requests as we close out Thursday is this dollar Swissy, right? So just continue to watch it. It's a setup that's taking its time, but right here we are at the lows, another 80-20 scenario off the daily, okay? But you can see how, right, it's starting to move a bit. Okay, it's starting to move a bit. So this is going to be Joanna, yep, quite interesting to see, right, if that dollar continues to catch bids and move to the upside. All right, but let's see how the week closes out. Okay, I forgot who it was. Somebody in the group. Forgive me, had caught. I thought on one of the sessions they had pointed out the potential for a head and shoulders a while ago on this pair. Nice to get my charts right, but hold on. Let me reset. Take another look at it. And all right, here we go. Okay. All right, get that left shoulder back up here. Okay. That back through, right? Like that, right? So when you draw out that type of pattern, then the flow becomes like this, right? Bang. So we'll see if that right shoulder holds and we get a continuation to the long side, right? So this area, this zone, right? We're looking at that neckline. You got two levels there, a daily and a 4-hour. So we start to look for price to continue to move to the upside. We'll see what happens. Okay. We'll see. We get that to happen like that. So that's the dollar switch. So, hey, if you have some pairs that you want to take a look at, right? We're starting to get members in the group that are posting some really good setups, right? We're learning, we're spotting those 80-20s, beautiful plays. Saw some today, NZD, USD, all types of stuff. Setting up, sub fibs, running, catching them, all types of nice stuff in the group that I'm starting to see. And that's amazing to know that people are starting to get it and they're just diving in, right? And they're finding their own setups, and that's a beautiful thing. That's what it's all about. Joy, Euro NZD. All right, I'm gonna write that one down. That's it. Nobody else. Everybody tapped out for the week. All 80-20 out. Just gonna cruise it into the weekend. If so, that's okay. Got a lot of good price action this week already. All right. So that's all I'm seeing right now, unless we got a delay going on. So I'm going to take a look at this Euro NZD. Joy. See what's going on. Just a choppy mess. Right. We held, right? So I'm thinking from a weekly standpoint, right, we're moving long, right? The euro has been bullish. Look how I found that beautiful support. And we've been moving, but it's choppy though, right? So we pushed up out of the zone. We closed bullish just above. What was that? The high on that was 170.38. What was the high on that? 170.79. So we broke it, broke the highs. Now we're retesting, right? So this one, we had a, hey, let's look at this price action. And you can see how it's just holding. So we still, from a daily perspective, you get some good breakouts above that 171.06. We're like, hey, we're going to continue this thing moving along. That's from the daily there, right? And we just had this whole thing kind of just put the rectangle around it. Oops, delete that. Put the rectangle around it. So we're still kind of waiting for price to break up above this level here. Starting to, we got to break out in a pullback. So let's continue. So that's a wait and see. I want to see it break above that 171.06, Joy. That's what I'm waiting on that. All right. Did you UNCT? Yes. I do like the CAD Swiss, right? Watching those these CAD pairs. Let me see. Yeah. So it's just floating, right? See how it's just hovering there, but I'm looking for that to pick up momentum and break. So I'm thinking long on the swing. That's where I'm at right now. On that, it's kind of just ranging right now. So I'm trying to look for some momentum to get buy side on it. 1 hour trend line break retest forming for the buy on that. So let me take a look. Oh yeah. Oh yeah. Yeah, I didn't look at that 1 hour. Got it marked up, but I didn't look at it. Thank you. Yep. So we're hanging in. Let's see if it's time. Right? Let's see if it's time. That's what I have on that. You have something similar? Or That's what I have on that one for that cash swissy. Joe, you're just looking at it? Okay. 1 hour trend line break and retest for me. It's gonna be interesting. We'll continue to watch the sentiment, right? We saw what happened today, how investors are feeling. Let's continue to see. Let me check something out. Let me check something out. Let's take a look at the commodities and look at crude. Dropped around 1% to 77 on Thursday, pausing a 3-day rally, right? So that's a correction. As rising U.S. inventories offered a bleak picture for domestic demand. That goes back and forth. The Energy Information Administration said crude oil stocks rose last week to their highest since 2021, helped by higher production and somewhat sluggish consumption. Still, despite this pullback, prices remain supported by the optimism and recovery in global demand. Saudi Arabia, the world's top exporter, raised crude prices for Asian markets for the first time in 6 months, and the latest signal that demand could be poised to rebound on the likelihood of higher imports from China. On the supply side, suspended operations at a crucial oil terminal in Turkey due to the recent earthquake and unexpected shutdown of a major oil field in Norway continue to lend optimism to the bulls, right? So that's the supply issue, supply and demand. Demand gets higher, supply side declines because of natural disasters, everything else. You've got Saudi Arabia raising prices because they expected demand to pick up. So that would be good for oil, right? And so maybe that helps that CAD, right? Because we know that the number one commodity is oil. So let's see what happens with this CAD swissy. Any questions on that? Okay, so we're good. So let's see how that plays out. That's from the daily perspective, that's a huge swing, right? Some of those higher time frame targets, but these are some 1 hour levels as well. Okay. What else do we have? Nobody else? All right. Let's look at take a look at gold. See what we've got going on. Isn't that beautiful, right? Look at that. It's a correction. But look at the daily. Right? You see the edge you have, right? When you understand how the Fibonacci sequence, how it really works, right? How we saw, hey, we've got a new AB boundary, right? You see how it pushed up a little bit, and now we've got that correction, right? So no surprises there. Why? Because the market moves in waves. It just doesn't go up or down forever. So you can see this correction, right? We're back down to just about that 382. You can see on your smaller wave, right, how deep that correction has been on the 4, right? So we're always talking about alternating wave corrections where it was so impulsive, right? Buyers had control of the market, very shallow retracement. It only took back 23% of the move, and then it accelerated to the de-extension. Look at the large correction that followed, right? Look at the large correction that followed. So we'll continue to watch it. We know we're coming in on a 382 and a daily fib. This is a pretty deep correction. So let's continue to watch the fundamentals and the sentiment overall on gold, right? If you catch dollar catching bids, you know, if it continues to catch bids to the upside, you're probably going to see this continue to decline, right? Okay, so easy enough there. Just won't leave that zone. I know it's just sitting there, right? We talked, it wasn't too long ago that we were talking about, we were waiting on it to break 1857, right? That level. And now it's broken and it come all the way back to it, right? Which is an OB boundary area. So it's definitely a key zone, which is why you see you've got a good fight going on there. So let's continue to watch it. So that's gold. Let's take a look at the oil. See what we got. Okay, so you can see how it's kind of holding its own in this area on the weekly. We come to the daily. Right? You can see how it's just ranging, right? It's just ranging. We got a fib on it, but it's just ranging. That was a beautiful double top play. Right? Sometimes, right, you get on your charts and go through and see if you recognize certain things. Beautiful double top and a collapse. And now we're kind of just ranging in this area. Right? But you can see we're catching bids to the upside. Right? Off this level here. See? Saying it's a pattern-driven market. Okay? So let's see if we can continue to catch some bids on oil with some of the optimism, okay, globally, right? And here's that same double bottom that we just marked on the daily, right? We already had it on the 4, and you can see it's been pushing, and you look at that retest of this level, okay? So it's reconfirmed, right? This zone. It's reconfirmed this zone. So let's see if we can get further bids to the upside. So what does it look like? It looks like it's trying to do that. Look, here's a cleaner view on the 1. The AB boundary in that swing. Okay. So we can clean this up because why? That got taken out. That got taken out. Beautiful reversal. And settled. Now we're retesting that level. Look at that, right? What fib level is that? Let's see. See where we're at. What's going on there? 382. So let's see if it continues to catch a bid to the upside on oil. That'll be good for our cash Swiss play. Any questions on oil? No. Okay. Cool deal. Let's take a look at the S&P, see what's going on as a result of today. And look, right? There's our breakout. Okay. Still got that breakout marked up because it was a beautiful one to study. Break and a retest. Right? Break, beautiful retest. Boom. Boom. Right? Now we're corrected. When we come down to this 4, look at where we are. We didn't quite get that 382. Didn't quite come in, just a little bit shy. The market stalled right in that 118, 127 zone. Doesn't matter the asset class, right? So we may get that correction, right? Back down into our zone, at least back down to the 382. Look at that. Okay. So let's see how that plays out on the SPY. Take a look at the US 30. Okay. Choppier, a little more rangy, but you can see how that price action is the same, a break and a retest and then pushed up. It's been a while. It's been a while since off the lows. I haven't, I'll look at it like on TradingView, but I haven't looked at it on this chart ever since. You remember when everything blew up on me, right? I had to redo all my charts. I never put that one back on, but you remember when we caught that on the low? Right? So that's one that you just hold when you catch that. When you had that, remember it was Walmart and Target, Joy. Remember they had those terrible earnings and it caused that huge correction in the AB boundary. It was like, better open up your Robinhood app and pick that one up. Right? When you talk about consumer staples and stuff like that, you know, you're gonna get it at Walmart. So that correction in the bad quarterly earnings did not bother me one bit last week. And that's the difference between, right, understanding and getting the education, right? Because the market is driven by fear and greed. Right? So, Walmart missed the earnings. The world is coming to an end. No, it's not. I'm just gonna buy that dip, right? And so that seeing plus 15%. I'll remark that back. I'll remark that back up and run it. See what I mean? All right. This also just teaches us how to think in our everyday lives. right? Oh yeah, I remember that. That definitely. That's a good reminder. It's a very good reminder. We'll take a look at Bitcoin. See. Take a look at everything. So you remember this, right? People that were in the group with us for quite a while, right? When we spotted, remember this right here, right? That crown, that right tip, straight down. And we've been trying to watch it because, right, we had it something like this. Right? We were saying, hey, eventually, right, around that 9,000 area, we may still get there. That seems like ages ago now, right? But that still may come to fruition, right? As it turns over, right? We get that drop. Okay. We had it on the let me see. Because we drew it up. There we go. So let me take this off now because that swing has happened. Okay. I'll put the normal template on here. Okay. I wonder, right? Right at the edge of that sell zone. I wonder if that's ready to just continue, turn over, continue. I don't know. Hard to call with cryptos. A whole lot of back and forth. I'll just be glad to see when it's highly regulated. They revamp everything, and then things will get, I think, more steady. And I think overall it'll be better for everybody. So that's where we are. It's turned over. It's turned over on us. So let's go. This is the one. Just passed the D extension. It's overextended. So be looking for a reset. Matter of fact, all right, we should have that. That should fire up. Maybe we run into an 80-20 on the 1 hour at that weekly level, at 21,477 level. Keep an eye on that. That's Bitcoin. Any questions? All right. All righty. So let me see. What else? This we already covered that one. There was one more that I wanted to take a quick look at. I want to take a look at the UJ. It's the other dollar cross that I wanted to see. Okay. So we can see how I was holding, right, at that support. Okay, on the weekly. And we can see how, right, we got a good pullback on that. But this may continue deep into the boundary here. And move past that 50% pullback, right? Move back up into the zone. So we'll continue to watch that, right? It's gonna be interesting with the dollar. So it's making a correction like we thought. That might continue to run, right? People start flooding that money back into the dollar out of concern. That might That might keep running to the long side, everybody. So let's watch the stock market, see how they close out tomorrow, how they close out the week, and read some of the reports over the weekend. Try to get an idea of what the sentiment may be in the short term going forward. But that's the UJ, right? It's been moving down, so that's naturally a correction. I just wonder if it's going to continue to push up through the zone. Any questions on that UJ? No? All right. Well, hey, look, we're going to wrap this thing up for tonight. Let the market start to reset itself so we can dive into some more 80-20s a lot sooner than later, because there were a bunch of them. There were a bunch of them this week, coming out of the weekend and all this week. So, appreciate you showing up. Awesome job. Continue to do your homework. Continue to dive in. Don't be afraid to post your charts in the Discord, or like go ahead and do that. Right? Go ahead and do that. We want this to be, one big mastermind. We want everybody to learn. We want everybody to be able to be critiqued, right? Because that's how you get better. Right? Let folks tear it apart, ask you questions, right? You can't be afraid of that. That's how we ultimately master this thing. All right. So I tell you, I know it works, right? Because I used to have when I was running, my campus as campus president, there was this lady that we had. You're like, she's the most, she's so negative. Like she's always got something negative to say, blah, 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 blah. But I always remember that one of my mentors taught me coming up. And he told me, like, if you have a person, right, they may be cynical, right? But if they work hard and they show up all the time, right, keep them on the team, because that's the person, when you have a plan, that's who you want to put your plan in front of, right? Because the negativity and the cynicism at times, it's going to make them go through your plan with a fine-tooth comb. You know why? Because they're experts at finding something wrong with everything. And so you can utilize those folks to perfect your plan, right? Because they're going to catch something that you may not see, right? So that presentation, that report that you're about to send up, let them take a look at it. That idea, that grand vision that you have, and you're running around with all this optimism. Sometimes we can be so optimistic that we miss the details, right? Those are just different personality traits. So, let that person look at it, tear it apart. You already know it's coming anyway, right? And you chew up the meat and you spit out the bones. And that's how you want the group to be. Let people jump in there, ask you questions, right? Nitpick it, tear it apart, so you can catch those things that you might not realize, right? That you need to catch, and some things that you may not think about. Well, I'm bearish, this other person is bullish. Well, why? Why? That's why you have a group. That's why you're not by yourself in front of your computer trying to figure this out on your own. So just some things to think about. Everybody follow me on that. Drop me a 3. Let me know you hear me loud and clear. All right. Okay. So that's just some food for thought, not just on the charts, but just in life, period. Right? Everybody has value. Everybody. Right? So sometimes we have to eliminate our own filters and think outside that big, huge box. With that being said, we're going to close out tonight. Great session. Appreciate all of you being here. Hey, 7 a.m. Eastern Standard Time. Let's prepare for the upcoming week so we can let the trades come to us and we don't have to chase the trades. All right. Everybody, have a good night. Working has been wearing you out, but no excuses. I hear you. I hear you. What doesn't kill us make us stronger. That's it. Have a good night, everybody.